In this video, we're going to talk about Aterian, trading under the ticker symbol ATER. Aterian is going through a very heated phase right now because market participants are still deciding between whether there is a possibility to squeeze out the short sellers in order to get a huge amount of profit. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. So most of my videos are recorded and scheduled the day before and uploaded for the next day. For 5 days out of 7, it's a trading day, so of course by the time the video goes live on my channel, the price would have already evolved from there. If there are significant and very volatile movements during the trading day, obviously they will not appear in the video on that day. But usually, to the extent possible, my analysis will be based on the medium term and not really focused on the intraday movements. The reason why it shouldn't matter that much either way is because most people investing in stocks invest for some kind of reason that takes time to get developed, and that their positions are usually kept for at least a few weeks. With that being said, if there are significant stock price movements that happen afterwards, either they will not affect the overall picture, or if they're significant enough, they will be mentioned in the next video about the stock with reevaluations of the circumstances as needed. Aterian is an online sale company with also its own lines of products, including kitchenware, home appliances, beauty products, and many more. Aterian is leveraging its AI system to help the company to identify which products should be sold to maximize profit. It's also going through a short squeeze phase right now because retail traders wish to buy the stock up, forcing the short sellers to recover their positions, which would then trigger another big round of increase, maximizing the profits. Aterian is currently having a market cap of $286 million, which is far below the enterprise value of $451 million. This means that the market is currently viewing Aterian as a company with a discount, probably because the market is a bit uncertain about what to make of the company and the situation going around. Aterian doesn't have a lot of space to wiggle around because it only has 45 million outstanding shares and it has about 144 significant shareholders. The quick ratio and the current ratio for Aterian is relatively small at 0.56 and 1.03 regarding the company's liquidity and the solvency. So Aterian seems to be reasonably leveraged since it has a debt totaling $83 million for an asset totaling over $360 million. Compared to the market, Aterian is 90% more volatile than other stocks, which is normal because most other stocks are not in the high growth category and doesn't have a short selling going on before the short squeeze jumps back in. Its 52-week high is $49, and its 52-week low is just $3.04. This partially explains why investors want to have a piece of the action, since the stock may jump from where it is now to as high as $40 or $50, if the retail traders end up being right. Over the past few days, the average volume is 10 million shares, which is way higher than the current volume, which ranges between 4 and 6 million shares on a daily basis. Right now, the price action suggests that Aterian is taking it slow, as the volume and the momentum are both not really present. This should demonstrate that the volume should try to go above, I would say, 15 million shares a day in order to represent like a good catalyst that is significant enough so that the price can go through the resistance levels of around $9 and $10 before, of course, testing the $16 level. Looking at the options market, investors do have an overwhelming preference for call options, which means that they do expect the price to go higher eventually, with the most significant exercise prices at $7.50 and $10. My recommendation is to own a position up to 1% of your portfolio and make sure to increase your exposure when things don't look that well, when others seem distracted or discouraged. Of course, make sure that you're comfortable with the risk profile of Aterian before jumping in, because it is still a growth stock with a short squeeze going on after all. The profit taking should happen after the short squeeze is accomplished, since that is the main attraction of the trade. Your investment should also take into consideration the market conditions at the time and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomena are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational, and I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable, or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.